Hi everyone, I'm Sarah Martin, the Associate Director of Forecasting at Dodge Construction Network, and today we'll look at what happened to the DMI in the month of December. Quick reminder here, the DMI tracks the 3-month moving average value of non-residential building projects as they enter their earliest stages of planning. We do not include manufacturing or transportation projects, and we only include projects valued at $500 million and below. Overall, the DMI typically leads construction spending by 12 to 18 months. So the DMI grew by about 7% in December. Commercial planning improved 3.5%, and institutional building improved 14.9%. Breaking this down a bit, we can look at the commercial and institutional portions of the index. So on the left, on the commercial side, we continue to see planning momentum accelerate across most construction sectors, but I would say the strongest levels of growth we're seeing in warehouses, office buildings, and of course, data centers. You can see the typical breakout there where we remove data centers over the last 3 years. And although momentum has been building in the past 6 months or so on the commercial side, certainly not to the same degree that we've seen on the data center side. So when we do include data centers, that overall trend is obviously much stronger. On the institutional side, we've also been seeing very strong levels of growth over the past 6 months. In December, education and recreational building was really what drove that 14.9% growth. So year over year, the DMI was up 50% when compared to December of 2024. The commercial segment was up 45%. If you remove data centers, that year over year growth is closer to 30%. And the institutional segment was up 60% over the same period. So overall, I think the story remains pretty consistent with what we've been saying in recent months. We expect that non-residential construction will see some levels of acceleration in 2027 alongside sustained momentum building in data center planning, healthcare planning, and recreational building as well. We also know that inflationary pressures will support kind of these nominal activity levels too. So even though economic risks remain elevated, the assumption that inflation will create higher prices is causing owners and developers to kind of build in higher project costs and is also driving some acceleration in this index as well. Another quick note here, our preliminary Q4 data is showing that projects are moving through the planning process a little bit more quickly than in Q3. So it's taking a median number of about 16 months in Q4 for projects to move between planning and groundbreaking compared to 18 months in Q3. So that's offering maybe a little bit more optimism, a modest boost to our near-term outlook, but I think overall a little bit too early to tell if that trend will be sustained or if it will slow back down again as we move into early 2026. All right, that's all I have for you this month. Thanks so much for watching.